You should sell all your Bitcoin immediately without any delay, according to Bloomberg analysts who are warning of a significant and potentially massive shock scenario here, looming fears of a potential recession. These are not my predictions, but Bloomberg assumes that Bitcoin could fall to 10,000 US dollars because they are expecting a massive setback in the S&P 500 for 1,000 US dollars. And this would massively drag Bitcoin down with it.
You're saying that Bitcoin could go down. If the S&P goes to 4,000, you could be looking at a $10,000 Bitcoin, correct?
Well, that's based on past performance. That's exactly where it was.
It's really crazy what is being claimed here. And the thing is, Bloomberg is quite a relatively reliable source. Or yes, reliable is always relative, but you definitely listen when Bloomberg has something to say. When Bloomberg analysts have something to say, we're now going to look at the entire analysis. We're usually ultra bullish on this channel, but I also like to look at the other side. What do the people from the bear camp say? Because it's also important, I would say, to see both sides. Not just the bullish side, but also the bearish side. This might be the worst Bitcoin news we've heard so far in 2025. Bloomberg analysts say Bitcoin will drop to 10,000 US dollars. Now let's watch the entire clip and what this analysis is about and why Bloomberg is so bearish here.
By the way, this is the main analyst, Mike Clone. Bloomberg analyst, senior community and strategist here at Bloomberg, who is putting out these massive theses.
Bottom line is some of my Bloomberg colleagues are shockingly bearish. I haven't seen this before. So for instance, Gina Martin Adams, our equity team, thinks it's potentially going to have a recession, which means fair value for the S&P 500 is 4,000. Now, that's not a big deal, but it's a 1/3 correction. And I want to point out just a few charts if I can as I go through some of my wrap here, just for a few minutes.
I just checked again. The S&P 500 is currently at 5,200 US dollars. And they now assume that the S&P 500 will have a setback. Not just him, but the entire Bloomberg analyst team assumes that there will be a recession. Then the S&P 500 will have a setback by a third down to 4,000 points. And this will then massively push Bitcoin down. I mean, a few years ago, we were still at the point where we were at 4,000 US dollars. From that perspective, one could also say, well, okay, maybe it's not that bad. The next question would be whether Bitcoin will really be dragged down so massively. We'll get to the part later where it says, Bitcoin will go down to 10,000 US dollars. I also assume that this is somewhat exaggerated. I also wonder, what is Bloomberg's motivation here? Why do they want to talk down Bitcoin so much? Why are they doing this? Such panic? I've already explained to you that there is a very, very strong hodler base in Bitcoin. That means approximately 70–80% of the Bitcoin network is not really moved, but they are simply long-term hodlers who just have their Bitcoin in cold storage on a hardware wallet and so on, and who are simply not interested in selling Bitcoin. That means the liquid supply in the Bitcoin market is maybe 20%, 10%, depending on whatever. So there is liquid supply that is on exchanges, which is even less. And there is liquid supply that might be on the Bitcoin blockchain in general, which might be on a hardware wallet. But there is also a liquid supply that is basically not moved at all. And you really have to differentiate, meaning a liquid supply that is not moved at all, liquid supply that is not on an exchange, is on a hardware wallet or something like that, but could potentially still be moved. And then there is liquid supply that is only on an exchange and not on a hardware wallet. And that is the supply that is potentially up for sale. And we also see the coins on the exchanges. They have been decreasing for several years now, like 3 or 4 years or so, becoming less and less and so on. And accordingly, my thesis is always that Bitcoin has a floor price of, I don't know, 50,000, 40,000 US dollars, where it's really, really difficult to go below that, maybe at most somehow 30,000 US dollars, but definitely not 10,000 US dollars, because there are simply no sales at that level. You just have to know that. Because if we have, for example, a 20% pullback in Bitcoin, then the weak hands get out, but the weak hands are out from the start. The further we go down, the fewer sellers there are, simply because the hodlers become even stronger. That means the more we sell, the more we crash, the stronger the hodler supply becomes, and the lower the chance that...
The key thing that's happening is this top chart here. That's the S&P 500 divided by the rest of the world. That number here, that level here, we were just a few months ago, was the highest ever. I just take it from 2005, and I show it just relative to the MSCI X-US index. This trend line has been in place for 20 years. We are breaking below it. So that's a deflationary force. Same time, this is U.S. stock market cap to GDP. It was 2 times GDP just a few months ago. There's only 2 times in history we've had that, significant times, in major markets. 1929 U.S., 1989 in Japan. I was somewhat involved in 1980 in Japan working for Japanese firms. They're still imploding. At the same time, this is deflationary forces just catching up to what's happening. Crude oil is already heading lower, and Chinese government bonds yields are already heading lower. And again, this is me. I was trading these in Japan 30 years ago. The world is tilting towards deflation. We have a significant reason to do it now.
Oh, a reason he mentions here for why there will be a setback in the S&P 500, which will then drag Bitcoin down, is that the world is transitioning into a deflationary world because we have such significant productivity advancements that goods are simply becoming cheaper. I've mentioned this before with AI and so on. It could naturally be that we are moving into a society of abundance. Now, maybe also a bit exaggerated, but that many things are taken over by AI. Of course, not everything can be taken over by AI, that's clear. Then it would naturally be very difficult for the global economy at first, because we actually live in an inflationary world. I mean, we are already tending towards a deflationary world, because technological progress means that goods are becoming cheaper even now. But simply because inflation is still higher than the deflationary production effects we have, it means that a house is actually becoming cheaper to produce, yet it keeps getting more expensive. This is simply because the inflationary effects of monetary expansion are higher than the deflationary effects of technological productivity. And it could be that there is a tipping point here where, despite the inflationary monetary characteristics, or not characteristics, despite the inflationary world we live in here still, the deflationary progress is so significant that we still see lower prices here. And according to Bloomberg, this would throw the markets into disarray, it would destroy business models, it would lead to market sell-offs and drag Bitcoin down with it. But I would even make the case that deflation is the best thing that can happen for Bitcoin. Bitcoin is already a deflationary asset by nature. Well, I don't really mean it, but from 2140 it will be deflationary, because then more can be distributed in Bitcoin and potentially people can still lose their keys. Some also say it is already deflationary because your life in Bitcoin is simply getting cheaper instead of more expensive. That's why many assume it is already deflationary now. And when we live in a society of abundance and everything is always available cheaper, everything is always more easily available. The standard of living goes up massively, then people naturally want something that is absolutely limited. In a deflationary world, where there is an abundance of everything or everything is easier to access and obtain, people naturally want scarce goods. And that's where Bitcoin, commodities, gold, and so on will benefit massively. And that's why, yes, in the short term, it might disrupt the economy and pull Bitcoin down. But in the long term, it's hyper bullish for Bitcoin.
The thing I want to point out is what's really changed is the companions have broke up. This is gold heading higher. And what was all heading up together was the S&P 500, Bloomberg Galaxy Crypto Index, Bloomberg Galaxy Crypto Index, and the S&P 500 are heading lower. This is what people have learned the hard way who bought all those ETFs. They are learning so far that they bought leverage beta and not digital gold. That's a fact what's happening. What stops it is a key thing I want to point out. This is something I published on yesterday. One of the best indicators that's worked for hundreds of years, the gold to silver ratio. It's above 100. I published this yesterday, got a lot of hits on it, and just pointed out what's significant about this. It's a sign of it always spikes, almost always gets spikes when you have recessions. That's what you see magenta. It's breaking out higher. One thing that's notable, see this chart? I thought, Scott, you and Gareth would like this. That's unemployment. It looks like a bull market breakout to me if you look at it as a chart. That's unemployment rate. It's only, we talked about this 2 years ago. That's going to go to 6%. And that to me is what happened. It's a delayed reaction. So I just want to get a little bit into Bitcoin and then I'll leave it there and I'm sure we have a lot to talk about.
Trying to explain here why the economy is going to drift into a recession. He's mentioning various indicators here, like the gold to silver ratio and so on. According to the gold to silver ratio, silver should still catch up massively, which is why many people are very bullish on silver. You hear that repeatedly. Historically speaking, silver is simply undervalued. And in his assessment, it's also a recession indicator. I mean, I can't really say much about it. I've already said that even if a recession should come, Bitcoin will be dragged down in the short term. Bitcoin. It won't fall to 10,000 US dollars or something like that. But we'll take a closer look at the clip in a moment, because he still has some other exciting analyses. But just briefly here, if you're still looking for an optimal tax tool to track your Bitcoin, generate tax reports, and really be on the safe side when it comes to declaring your taxes, then I absolutely recommend it. Coin tracking, the best tax tool currently available on the market. Here you can even track your portfolio. The whole thing is completely free right now, and with the code BTC Hotel, if you sign up for a pro account, there's even a discount and you can save a lot of money here. Be sure to check it out. I'll put a link below for you. And now let's continue watching the amazing clips from the Bloomberg analyst.
People have been pushing back a little bit on me and might just point how Bitcoin's going to have a normal mean reversion. I'm pointing out here is 200-week moving averages of Bitcoin and the S&P 500. They're basically the same. They're still heading higher. It's still a bull market, and they're just heading back to those moving averages. Guess where they are right now? It's a Bitcoin to S&P 500 ratio about 10 to 1. That's about Bitcoin 200-week. I'm sorry, this is 200-week moving average is about 4,600, and the 200-week moving average in S&P 500 is about 4,600. Our team in equity says the fair value for S&P 500 in a recession is 4,000. So this is part of my reversion. They trade together. They're the same chart. And then I also enjoy how people push back in my call for 10,000. I'm really sorry. That's well below their profit market. But this is one thing you have to get for someone who's completely unbiased in markets. I've done this for decades, and just point out what usually happens. So if you look at the S&P 500 overlaid with Bitcoin on an autocorrelated chart, this is not me core. This is just the autocorrelation market. If the S&P 500 gets to 4,000, what I show you here is the high volume price. This is market profile. I used to trade by these things, made a lot of money, lost a lot of money trading this. It just shows since 2017, which was the significant year for Bitcoin. That's when futures were launched. That's when people like me could start leveraging. The high volume price is below 10,000. The average price from 2019 is below 10,000. Normal reversion means unless that crypto can way outperform the stock market, which notably it has been, Scott's been pointing out a lot lately, it has to. So I'll end with this one chart. This is not me again. I'm trying to play a little plausible deniability with my outlook, which is just normal reversion. What you see in orange, it's a Bitcoin specific driver index set up by a bunch of the real smart PhD people at Bloomberg. I don't even know how they did it. I read it. It's overlaid with the Bitcoin to gold ratio. It trades tick for tick until Trump was elected. Right now, the Bitcoin gold about 25, it shows fair value is below 17. That's just based on the model.
So again, just to summarize here, you're saying that Bitcoin could go down. If the S&P goes to 4,000, you could be looking at a $10,000 Bitcoin, correct?
Well, that's based on past performance. That's exactly where it was. The last time it was around 4,000. Bitcoin was around that level.
So it's already intense what she's saying here. And the astonishing thing is also that she says, yes, you have the expert team from Bloomberg here. And they are all highly paid experts. And they really know their stuff. They are true professionals. And then they just make the very simple conclusion, which in my opinion is far too simplistic. You just can't draw such a conclusion. And especially not when you're a highly paid expert, and especially when you're a highly paid expert team. You can't just draw such a conclusion. Like, yeah, the last time Bitcoin here was at 10,000 US dollars, the S&P 500 was at 4,000 points. And we assume that the S&P 500 will fall to 4,000 points. And that's why Bitcoin will also fall to 10,000 US dollars like it did back then. We just have to consider that a lot more has probably changed with Bitcoin than with the S&P 500. With Bitcoin, we now have a completely different floor price. We have a completely different group of buyers. We have a completely different foundation. That means the foundation we had back when Bitcoin was at 10,000 US dollars is very, very different from the foundation we have now. Also, the risk to reward ratio is very, very different now compared to back then. Back then, the upside was significantly higher than it is now, but the risk was also significantly higher than it is now. And now, while the upside might not be quite as extreme, it's still nearly as significant. But the risk is considerably lower because we now have BlackRock involved, we have nation states buying Bitcoin, we have ETFs that are constantly having a flow, continuously accumulating Bitcoin, and so on. And that's why it's very, very difficult to simply draw this conclusion. And I sometimes really wonder, what do such analysts do? What are they being paid for? And so on. It's really intense. It's just like the discussion we had recently. There was a discussion on X where people were debating. And then people said, yes, it's unprofessional to make videos without wearing a suit, for example. And you can only make financial videos with a suit, for example. But I also wonder sometimes, is it really that professional if I just put on a suit and pretend to be like Christine Lagarde or Jerome Powell, but still have no clue? Or if I pretend to be a Bloomberg analyst, put on a suit, but then just point out some correlation like, yeah, if the S&P 500 crashes down to $4,000, then Bitcoin will crash down to $10,000. That's an absolutely ridiculous analysis being made here. And just because I'm wearing a suit, it doesn't make it the analysis better, but that's just the world we live in, where some people just put on suits, and then people think they have some kind of plan about something. I mean, I'm not saying that I have a plan about anything. I mean, I'm also not claiming that I have any kind of plan about anything. I mean, at least I'm not. A complete disaster. And that's often the case with those suit wearers. That means, yeah, I'm not saying that I have the plan and have all the wisdom in the world. I'm just giving my best effort and trying to assess it as best as I can. But many people in suits assume that they really have all the wisdom, that they can outperform the market, that they can predict Bitcoin price trends. They can, and it's usually not the case. You really have to be very, very careful. Even if it says Bloomberg, BlackRock, or central bank, you still have to question it, even if the people are wearing suits. Okay, rant over. Let me know below what you think about the analysis. If you still want to buy Bitcoin, if you're already bullish like Bloomberg, maybe even want to take it as a buy signal, then I recommend checking out 21bit Coin. With the code Bitcoin, you can get up to 20% off the fees when buying Bitcoin. Super easy, super simple. A lot of people from our community use it too. I've heard a lot of great reports about it. And as I said, with the code Bitcoin Hotel, there's still a discount. See you folks. Until then, I'll put the link below. Peace out.